All right, welcome to Talk Tickers. Every now and then you come across an earnings report that just makes you scratch your head. The numbers are telling one story, but management is telling a completely different one. And that is exactly what we have today with United States Antimony Corp, ticker UAMY. This is a real tale of two tickers, and we're going to break it all down. Okay, let's just rip the Band-Aid off right away. The headline number that really rocked the boat was this one, a 500% miss on earnings per share. I mean, the street was looking for a small profit, maybe a penny or two. Instead, UME delivered a 4-cent loss. That's a massive surprise to the downside. The kind of number that, frankly, makes people sell first and ask questions later. But here's the twist. While the bottom line looked pretty rough, the top line, the revenue, was on fire. We're talking a 238% jump compared to last year. So wait a minute. How can your sales be exploding while you're losing more money? That's the big puzzle here, and it's what makes this story so fascinating. And just to be clear, if you look at the quarter in isolation, it was a miss, plain and simple. Not just on that EPS number we talked about, revenue, even with that big year-over-year growth, actually came in well short of what analysts were predicting. And on top of that, they had to lower their guidance for the rest of the year. So if you're just looking at the scoreboard for Q3, it was not a good look. But this is where the narrative completely flips. On the earnings call, management's message was basically, hey, forget about Q3, forget about 2025. They were telling Wall Street to look past all the current noise and focus entirely on what's coming down the pike in 2026. And what exactly are they pointing to? Well, this is the crown jewel right here. A $245 million contract with the U.S. Defense Logistics Agency. Now, this isn't just any contract. It's what's called a sole source award, which means UME is the only company that can do this job for the Pentagon. For a company of this size, that's not just a big deal, it's an absolute game changer. And they weren't done. They followed that up by announcing another huge industrial contract worth over $100 million. So let's put this in perspective. You add these two deals together, and you're looking at a backlog of over $350 million. This is for a company that did what, maybe $15 million in revenue all of last year? The scale here is just staggering. So what this really signals is a massive pivot for the company. They're not just a small mining operation anymore. They're positioning themselves as a critical piece of the U.S. national security apparatus. I mean, think about it. Antimony is a critical mineral, and right now the supply chain runs straight through China and Russia. UAME is basically saying, we are the American solution. That's a really powerful narrative right now. And the CEO, Gary Evans, he was not subtle about this on the call. He said it point blank, 2026 will be a banner year for this company. That one quote pretty much sums up their whole pitch. He's basically telling the market, don't judge us on today's numbers, judge us on the future we've already locked in. Okay, so how do they actually get there? How did they turn that huge backlog into $125 million in revenue in 2026? Well, they laid out their playbook pretty clearly. First, to get the raw materials from all over the world. Second, finish a massive expansion of their smelter to process it all. Third, bring their own U.S. mines online to really boost their profit margins. And finally, step 4, just execute on those contracts. It's an ambitious plan for sure, but that's the roadmap. So you've got management painting this incredibly rosy picture of the future. A huge transformation is underway. So how did the market react? Well, let's just say they weren't buying it, at least not right away. And this slide really shows you that great disconnect. On one hand, you have management saying this was one of our best quarters ever. We locked in $352 million. On the other hand, you have the market saying, whoa, hold on, you missed earnings, you missed revenue, and you lowered guidance. It's like two completely different conversations happening at the same time. The market is focused on today's problems, while management is focused on tomorrow's promise. And in the end, the market always gets the last word, at least in the short term. The stock dropped more than 5.5% the very next day, and on really heavy volume, too. That tells you a lot of investors heard the story, looked at the numbers, and decided to sell. For now, the bad quarter is weighing more heavily than the big contracts. All right, so that's the whole messy situation. What's an investor supposed to do with a stock like this? That brings us to our favorite part of the show, the next call. Let's break down our take on the trade. So really, it all boils down to one question. Is this drop a major red flag telling you to stay away? Or is it a golden opportunity to buy into a fantastic long-term story while it's on sale? That's what we need to figure out. So here's our thesis. We think the market is getting a little too caught up looking in the rearview mirror at that Q3 miss. The long-term story, the one backed by hundreds of millions in contracts from the US government and major industry players, that's still completely intact. It all comes down to execution now. In the next quarter, we're going to be watching for any revenue from that DLA contract. That'll be the first proof point. Make no mistake, this stock is going to be a battleground. But if they can get that smelter expansion done on time in early 2026, that's the key that could really unlock the value here. So with all that said, for the next call, we are initiating on UAMY with an outperform rating. Now, let's be crystal clear. This is a high-risk, high-reward play. It's what we call high beta, meaning this stock is going to bounce around a lot more than the average company. But we believe the potential reward here outweighs the risk. It's a bet on execution. If they can successfully make that leap from signing massive contracts to actually shipping product and booking revenue, the upside is significant.
This is not financial advice.